Today in the grain market, the soybeans retreated somewhat. You know, the long-term exports really have the losses that we're going to see is what's projected here, and it sent the market lower by double digits. It's certainly that the hopes of anything really coming up at this point is kind of kind of done. It absolutely looks like the weather is moving some of the corn acres over to soybeans, and it seems that as the trade talks drag on, that there's a permanent loss to that China business. The U.S. dollar is also up. The Brazil real is on the downside, and that kind of solidifies that China's demand for Brazil beans is front and center, and I think that the U.S. loses to that, and that's why you saw that the market really coming back. For corn, the corn rises again. Acres are certain to be lost, and I think as we wait for the crop progress report coming Monday afternoon, you're going to see these markets start to attend to what those numbers are. That bad weather is definitely slowing the planting right now, and farmers are just moving everything to beans just because you can plant it a little bit later. Wheat was higher. The futures did gain some momentum, and they're starting to hit a couple of significant resistant numbers. So technically speaking, we could get a little bit more support there. One thing to really watch out for, though, for corn and wheat right now, there are some big short positions. If the funds start to cover those, we're going to see a mad scramble, and we definitely could see some wild volatility. Certainly, we're off our lows that we had from the big sell-off on Monday, and now we're starting to see the market have a lot of movement and start kind of pay attention to what's happening with this wet weather. So the spring planting delays for the wheat also add to the support of the market. But the idea that we have big supplies could cap any kind of significant rally for the wheat side. That's not saying anything for the corn side, and I think we're going to see a lot more volatility ahead.